Hello, everyone. It's a beautiful and sunny morning out here from this part of the world. It's a good morning to you, and depending on whichever part of the world you're tuning from, I wish you good afternoon and good evening. Happy new month to everyone, and I wish you a blissful one and a profitable one as we kickstart the new month on a positive note. Thank you for your patience. We have been working on some technical issues as regards to our setup to ensure that we have a better experience out here. And that is simply the reason why it took quite a while before we came online. Thank you very much for your patience. It's just for us to all have a better experience out there. And because of this, I would really appreciate some feedbacks as regards to the sound quality and the visuals. So if you can hear me loud and clear without distortions, please let me know in the comment section. And if there is a need for me to increase the volume or probably do some adjustment, please let me know so that I can confirm that we're all on the same page. So thank you very much. I see your comment. Jonah Aruna, good morning to you. Simasiku, good morning and thank you very much for your support and compliments so far. So once again, happy new month to everyone. My own name is Sheriff Daramola, and for the next 40 minutes, let me say 40 minutes, I will be your host as I will be taking you on a trading journey where we shall be reflecting on the current market conditions using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of the assets on our watch list. And so far this week, we've been doing fairly well as we have three major assets we have been monitoring so far, which includes the US All Spot, the GBPUSD, and of course the XAUUSD. And in fact, we've done very well on the US All so far. I will consider the US All Spot as the most profitable trade for us so far this week, where we have the GBPUSD and the XAUUSD still running through a little bit of consolidation phase as we really have not gotten the sense of direction of where price will be going on this asset. But we are going to be looking at that in details. Then, considering today to be the first trading day of the month, it comes with some peculiarity, especially which is more or less psychological, as majority in the market will be testing waters now to see how the market is going to be reacting to the first trading day of the month. And coupled with the fact that we have series of high impactful events that are lined up for the rest part of this week, we also want to be taking all this into consideration while we look at the current market situation. For those of you who are joining us for the first time, you are highly welcome on board. I'm very glad to have you around with us this morning. And to give a quick background of what we do here, as technical traders, we gather here on a daily basis in anticipation of both the London and the New York session, where we come to review our existing position. In fact, above all, it's a follow-up detail to the videos I normally share during the course of the weekend. So we come here on a daily basis to review them, follow up on them, and see how we can manage our existing positions, while we also look out for new trading opportunities ahead of the London and the New York session. So I encourage you to stay tuned in so you don't miss out on any of these ideas we will be talking about today, and be part of the subsequent editions, as the more time you spend with us, the better you get to understand how things work in this community, which eventually you will be able to use the information you gather here to make your own independent trading decisions. So once again, you are highly welcome on board. I'm here to see some feedback. Please let me know in the comment section. I really appreciate your feedback. Can you hear me? Can you see me? Are there no lags? Please let me know in the comment section. So with that being said here, we will be diving right into the business for today. And as usual, you know how we do it. The first thing we normally do is to check on the economic calendar. And we all know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact event coming in from the economic dockets that affects the assets on our watch list. And for this week, since the asset we are looking at comprises the US dollar and the pound sterling, then we want to readjust all this and include only the United Kingdom and the United States. Then in terms of the strength of the impact, we shall focus on high impact event and click on the apply filter, and here we go. So for today, Wednesday, November 1, we have about 5 high impact events we are looking forward to, all of which are coming in from the United States economic docket. Now, the first one on our list today is the ADP employment changes in labor sector data, and is usually released by the Automatic Data Processing Incorporation. Now, this data here is a measure of the change in the number of employed people in the United States. And generally speaking, a rise in this indicator has positive implications for consumer spending, hereby stimulating economic growth. So what this simply means is that a high reading will be giving us a positive or bullish sentiment in favor of the US dollar. Now, if we look at the previous data for the month of September, it came in at 89,000, and the consensus as regards the projection for this month is coming in at a whopping 150,000. So there is this expectations that there's going to be an expansion in that sector. In fact, it's almost double of what we had in the month of September. So we look forward to see what the actual data is going to be like. Then in about 6 hours from now, we have the ISM manufacturing PMI, which is the Institute for Supply Management. And this index here shows us business conditions in the United States manufacturing sector. This is considered to be a significant indicator of the overall economic condition in the US, and any result above 50 is considered as favorable and positive, which will in the long run dovetail in a positive traction for the US dollar. Now, looking at the previous data for the month of September, it came in at 49, a little bit shy of the 50, which is expected to be the baseline. And for the month of October, we have a consensus here projecting 49 again. So it shows that there's really not, based on what the economists are saying, it shows that there's really not any major difference from what we had in the previous month. So we're also going to be looking forward to that data too. Now, the major one here, which is the Fed interest rate decision, which is, of course, from the Bank of England. And this is one event majority in the market have been looking forward to all throughout the course of last month. And there's been a lot of speculations as regards to what the data will be based on the economic features we saw from the US economy, which obviously, if we take a holistic view into it, it shows that the US economy is quite resilient compared to any other economy in the world today. So this event here is a preset regularity, a nation's central bank as economic policy meeting in which board members take different measures, and the most relevant one being the interest rate that will charge on loans and advances to commercial banks. Now, this is the expectation on the interest rate decision is that there is likely not going to be any rate hike, that it will remain unchanged, leaving it at 5.5% as it was during the last rate decision. So with that being said here, we are looking forward to an unchanged interest rate. So anything could happen. We could have a rate hike, but we're not sure we're going to be having a rate cut, of course. So we look forward to what that data too is going to be saying. Then we also have the Fed monetary policy statement, and of course, finally, the FOMC press conference, where the Fed chairman will be entertaining questions from the press. And of course, whatever he says here will be giving us an insight into the monetary policy of the Federal Reserve and the reason why they either kept interest rate unchanged or probably the reason why they will increase interest rates. And of course, this will give us an insight into the health situation of the United States to further buttress and help us guide our trading decisions for going forward. Now, with all the informations we have gathered here, as technical traders, what we are going to be doing, we all know that the anticipation of this event alone has a tendency of influencing the market sentiment, which of course will reflect on the chart as price action. So talking about price action, let's go back into the chart. So I see your comments, Simasiku. Thank you very much for your positive feedback. Thank you for that. Ika's Diary, good morning to you. Happy New Month to you too. Now, going back into the chart, the first asset on our watch list today is going to be the USOILSPOT. And in fact, the USOILSPOT has been on a back foot since the beginning of the week. As you will see, price action had consistently found lower lows and lower highs. Now, it's the third day consecutively that we've been experiencing this, and there are chances that price could still drop further to the downside due to the diminishing global supply concerns. You know, there was this global supply concerns, but the way things are going, the concerns are diminishing with time, and in that regard, we've seen price of the oil drop to the downside. Now, going into the first trading day of the month, one of the things we are going to be looking at today is to see what the potentials of the sellers are, as things are still looking very bearish at this point, and if there are any chances that buyers could come into play during the second half of this week. Now, let's go into the chart and look at things from a technical standpoint. So how did we start this week and what led to the decisions we made so far this week? Now, at the beginning of the week, it was quite clear that the market was initially caught within an indecisive phase where price was confined within the $84.60 level and the $83.85 area, giving us clues into the uncertainty in the market as at that point in time. And one of the things we usually do whenever we see such structures on the chart, like flat channels like this, we exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, at no point in time did we see price break out of the resistance line, of course, which hereby negated the idea of thinking of even buying this asset at the beginning of the week. But instead, we saw price action did multiple breakdown of structure, giving us clues that we might likely be seeing price drop further to the downside. And in fact, a couple of hours into the New York session on Monday, we saw price break down the support line of that range at the $83.85 level. And in fact, if you had missed out on the first breakdown, price came back to do a couple of retests of that structure right here on the 1 hour time frame to incite it down. And we have been buying the USOILSPOT. Now, during our live session yesterday, we acknowledged another range as we saw price confined within the $82.80 level and the $82.15 area, where this further emphasized the consolidation phase that was happening around that area. Then we also talked about the potentials of buying and the potentials of selling too as well, and I made emphasis on what we want to see on this chart that will make us considering buying. And one of the parameters we said we will be using to guide our trading decisions for yesterday's trading session was this descending trend line after connecting the series of lower highs. And we agreed that as long as price remains below the descending trend line, we will not consider buying this asset. And the only condition that will make us buy is for price to break out the descending trend line, then a retest of structure giving us confirmations to join the uptrend scenario, which obviously never happened. Now, with that being said, we saw price break down the support line here at the $82.15 level to trigger our second sell position for the week, and price nosedive to the downside into that $80.85 zone area. So as at this point, we have over 350 pips running in profit right now. The first position is running with 260 pips, while the second position here is running with about approximately 100 pips at this point in time. And for those of you who took advantage of this opportunity, well done to you, and kudos for being on standby to capitalize on this move. Now, with the current situation we have here, it is very important that we move our stop losses to protect our positions against any sudden pullback that may likely happen, considering today being the first trading day of the month. And if you look at the structure here, I'm of the opinion that anywhere above the $84.50 level seems the $81.50 level seems most appropriate to move all our stop losses to, considering how that area had played a demand zone at some point before structure was broken to the downside. And remember that as we try to move our stop loss to protect and secure our positions, let's ensure that we give enough breathing room for price action to move around in anticipation of a potential downtrend continuation. Now, with all our stop losses in place and with a well-secured position at this juncture, what is going to be our next line of action? What are our plans for today? How are we going to consider continuing the downtrend scenario? And if we do, what is it that we want to see on this chart that will make us feel comfortable joining a bearish momentum? And in fact, if we are going to start considering buying, what is it that we want to see on this chart that will make us feel comfortable buying this asset? Now, in preparation for today's trading session, we have a major parameter here that will be guiding our decisions, which is the descending trend line you can see on your chart right now, which emphasizes the lower highs that has been characterized by this current market condition. And of course, you know how we treat our descending trend lines in this community. As long as price remains below the descending trend line, we feel comfortable in our sell position. So as long as price remains below the descending trend line, we shall continue to look out for selling opportunities. Now, if we look at what has been going on here since the later part of the New York session yesterday, you will see that as soon as price got into that $80.85 area, we begin to notice that sellers are finding it difficult to break through that area, which further reveals the presence of buyers here. Now, for me at this point in time, we can't jump into conclusions that this might incite a bullish momentum. Of course not, since price still remains below that descending trend line. So at this point in time, I will consider the build up in bullish momentum here to probably be the beginning of the retracement of that impulsive move that happened yesterday. So if I will give a visual representation of what I'm expecting today, we might likely see this buy pressure lead into price action coming back into both the descending trend line and the $82.15 level, which lines up with this current structure that was broken yesterday. And of course, you know that from a technical standpoint, when price action breaks down a key structure like this, we expect price to come back into the structure at some point to incite a downtrend continuation. Now, if this is going to be the case, then we want to be seeing some selling pressure around this area, which will reveal that buyers are finding it difficult to break out of that descending trend line and the $82.15 level. Now, if price gets into that area and we begin to see selling pressure or double top structure, head and shoulder patterns, whatever the case it may be, in form of a reversal pattern there, we mark out the neckline, look for the breakdown retest of the neckline to join a downtrend continuation to the downside. And if price action goes on to break down the $80.85 level, we then had more sell position to our existing trade. So that is one scenario to this. However, if price action breaks out of that descending trend line and the $82.15 level, then at this point we have a signal that will insinuate that we might likely be getting ready for a momentum shift. Now, if price breaks out of that descending trend line, it will be a good signal that the trend line may no longer have the capacity to continue to negate the bullish attempt. And if this happens, we want to start looking out for structures and patterns that will support the idea of buying these assets. Now, if we are going to be buying that bullish move, we have levels like the $82.80 level, we have the $83.85 and the $84.60 area if price continues to climb to the upside. So that is how we are going to be managing that confluence around the $82.15 level and that descending trend line. However, if price decides not to get that far, that is, if price does not get into this area but instead drops to the downside, breaking down the $80.85 level, then at this point we do want to be getting ready to sell. So this is what we'll be looking out for to sell the US Oil Spot. Either price breaks down the $80.85 level or retraces back into the $82.15 zone where it shares a confluence with that descending trend line, and the appearance of selling pressure around that area will welcome selling opportunities. And the only condition for me to consider buying the US Oil Spot today is for price to break out of that descending trend line and the $82.15 level. So you can see how this descending trend line is going to be playing a major role in guiding our trading decision, at least for the rest part of this week. So these are my views on the US Oil Spots. You would want to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And if you do have any questions as regards to the setup or as regards to my explanation and you need further clarifications, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, while you also use that time to mark out these levels on your chart. All right, so in the absence of no questions, I do want to assume that we are all on the same page. And in that regard, let's move on to the next asset. But if you still do have questions, feel free to drop them in the comment section. So moving on right now, we'll move on. So the next asset on our watch list for today is the GBPUSD, which is usually called the cable market. And in fact, we can see here that the bullish momentum still looks very valid at this point, as price action still remains above the resistant line of that range we identified at the beginning of this week. Now, despite being taken out of our buy position with a considerable amount of profit yesterday, the pound sterling is still displaying some defensive peculiarities as price still holds steady above that resistant level. However, in the other side, the US dollar is gaining some traction too. If you look at the other assets, especially the US dollar index, and of course the treasury, which is of course growing by the day, market participants are very, very indecisive at this point in time. And this has led into the sell pressure we noticed yesterday, bringing price back into that zone we had. Now, if we look at things from a technical standpoint, starting from the beginning of the week, remember that we identified an ascending trend line. In fact, we had a couple of them on the 1 hour time frame. Look at what we had here. We connected a series of higher lows here. Then we also connected another one right here, giving us a couple of ascending trend lines. And our agreement since the beginning of this week was that as long as price remains above this ascending trend line, we continue to look out for buying opportunity. And the only condition that will make us sell is for price to break down, retest the trend line, that is, breach the trend line, hereby negating the trend line to give us a selling opportunity, which is yet to happen at this point in time, giving us that idea to hold on to our bullish bias going forward. Now, in addition to that trend line, we spotted a range at the beginning of the week. As you will see, price was confined within the 1.21330 level and the 1.21060 area to emphasize the level of indecision at that point in time. And of course, you know how we do it in this community. Whenever price action falls into this kind of range, we exercise patience and wait for either the breakout of the resistance line or the breakdown of the support line to give us an opportunity to trade. Now, we saw what happened. Price broke out of the resistance line on Monday. In fact, if you had missed out, you saw how the market came back multiple times to retest that structure and incite another bullish opportunity. And since that moment, we have been buying these assets. We bought again at the 1.216. We bought at the 1.21750 level, and we saw how price nosedived to the downside about an hour into the New York session, bringing price back into the entry point again. And of course, we know that if price comes back to retest that resistance line again, we do want to be adding more buyer position. And if you had done that, well done to you for being on standby, as you will currently be running with a minimum of 10 pips in profit at this point in time. Now, the next thing I'll be asking you to do right now is to move your stop losses accordingly, secure the current sell buy position, because we have noticed now that since the later part of the New York session yesterday, we have seen attempt by the buyers to continue the trend to the upside, but the barrier at the 1.21600 level has been negating all attempt by the buyers to break out of that structure. So in that regard, I will suggest that we move all stop losses to our entry zone while we exercise patience and see how the market will react in anticipation of the Fed's interest rate decision and of course the economic data coming in from the United States today. Now, with that being said here, how do we intend to capitalize on the next trend? Now, if we consider the bearish momentum that started yesterday, that pushed price back into the area, taking out all the profit we made yesterday, there are chances that sellers could come in at any point in time, hereby increasing the chances that this ascending trend line may likely be broken to the downside to incite an opportunity to sell. So in that regard, I want us to take into consideration the potentials of the sellers first of all, based on this current market structure. Now, for us to consider selling at this point, I would like to see a breakdown of the ascending trend line, at least this major one right here. I want to see price break down the structure, and interestingly, this trend line here shares a beautiful confluence with the 1.21330 area, which happens to be the neckline, the resistance line of that range we identified at the beginning of the week. So if I do want to consider selling here, I would like to see price break down both the 1.2133 and the ascending trend line. Now remember that we are not going to be getting too excited here by placing a sell stop order below that structure, as the breakdown here could still turn out to be a false breakdown. Now in that regard, we want to exercise patience and wait for confirmations to happen, unless maybe you already have some profit so far on the GBPUSD today, where you can afford to risk some of the profit you had made so far by placing a sell stop order below that structure. But if you are new and this is going to be your first position on the GBPUSD, then I will just suggest that you exercise patience and wait for confirmations to happen, which will be signs that buyers are finding it difficult to climb and stay, where buyers are finding it difficult to break back above the 1.2133 to incite a downtrend scenario. And if price continues to the downside, we have another level which happens to be the lowest point price action has been for this week to welcome more selling opportunities. So that is the only condition here that will make us consider selling the GBP USD for today. However, if we are going to be considering the uptrend scenario based on the fact that price sits above a robust demand zone, remember, if you had watched my video on the GBP USD during the course of the weekend, you will see that the current market structure is sitting on a strong demand zone. And if you have not watched that video, please check the link right in the description box of this current video so you can check it out after this live session. So based on the fact that this area around the 1.2133 area had been a platform for buying pressure since the beginning of this week, I'm of the opinion that price may still continue to the upside. And if that is going to be the case, we'll still look out for more opportunities at the breakout retest of the 1.2166600 level, where we look out for more opportunities at the breakout of the 1.21750, 1.21990 area to maximize the uptrend continuation. And in fact, if price action finally breaks out of this highest point at the 1.21990 level, I want to feel very, very confident in this bullish momentum. So these are my views here on the GBP USD for today, and I encourage us to exercise patience and wait for our structures to mature before we jump into any positions. So if you have any questions whatsoever, feel free to drop them in the comment section. As usual, I will be taking the next 10 to 15 seconds to see if there are any questions, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. I see your comment, Princess Abulokwe. It's been a while since I saw you. Trust you are doing very well. Good morning and happy new month to you. I'm very glad to have you around after such a long time. All right. So in the absence of no questions, let's assume that we are all on the same page. Well, I'm still on the lookout for your questions. If you have any, you can still drop them in the comment section. So with that being said, here we will be diving right into the last assets on our watch list for today. So the last asset on our watch list for today is the XAUUSD. In fact, we had quite an interesting situation going on in this market since the beginning of this week. Remember, we were holding on to a bullish bias before price action took us out of all our buy positions. We had a couple of more buy positions added after the initial setup we took advantage of. And in fact, the first position closed in at break even, but the second position closed in a loss as we saw price drop to the downside, breaking down that ascending trend line for the first time this week. Now, from a fundamental perspective, the decrease in safe haven demand and the anticipation of more hawkish stance from the Federal Reserve are exerting a downward pressure on the gold, and we can see its reflection on the chart at this point in time. Hence, we'll need to be very, very careful at this juncture, as if you have your sell position running right now, you do want to be securing them at this point. Now, for the sake of those who are not part of our live session yesterday or probably since the beginning of the week, let me quickly run through what we saw at the beginning of the week that led to the decisions we were making. Now, the first thing we noticed at the beginning of the week was a consolidation phase, where price was trapped within the $2006.50 level and the 1995 area, giving us an insight into the uncertainty at that point in time. And in fact, we were looking forward to a potential retracement based on the lower highs we observed at the beginning of the week, which gave us this beautiful descending trend line for us. And we were thinking that price will retrace back because of this impulsive move. We said price may likely retrace back into that 50 and 78.6% retracement of that impulse leg to inside an uptrend scenario. And in that regard, we talked about the potentials of a counter trend opportunity. However, when you look at what was happening in this market since the early hours of Monday's trading session, you will see how the $1,990.60 level had played a major role in negating all attempt by the sellers to break through that area. So we saw the first attempt here on Monday. We saw it happen again during the New York session on Monday. Then we saw another one happen here during the early hours of yesterday, hereby giving us the confidence that buyers may likely continue to push price to the upside. And the further breakout of that descending trend line for the first time was another confirmation which aided the idea that we should consider buying this asset. So we joined that move all the way. We saw about a 100 pips move. We had about two positions running. The first position closed at break even, while the second position closed at a loss, giving us a loss on that buy position we took. So one of the plans we also had it here yesterday is that if at any point in time the price breaks down this ascending trend line, we do want to be selling the XAUUSD. And to further buttress that, we had this $1,990.60 level as a yardstick to look out for selling opportunities. And one of the major reasons we did this was simply because of how that level had played a significant role in negating the seller's attempt since the beginning of this week. And we said if price will break down that structure, retest it, then we want to be joining a decline. And of course, we did join. For those of you who were part of the XAUUSD live window yesterday, we had the privilege of joining the retest of that structure as we rode the move all the way to the downside. And then another breakdown of the 1,980 happened, which led to another additional position. But at this point in time, I'm already out of my trade on the XAUUSD sell position. As you all know how we do it in this community, as soon as price moves significantly well in our favor, we do want to be moving our stop losses and secure the current sell position. And thank goodness, one interesting thing about this is that though the profit is not that significant after being taken out of that sell position, but the fact is that we are able to recoup the loss we incurred at the beginning of the week, especially on that buy position we took, which makes us be on a positive side on our portfolio. And for those of us who took advantage of this opportunity, well done and kudos to you for being on standby to capitalize on this move. Now, going into the London and New York session today, what is going to be our plans? What are our expectations? Is this bearish momentum going to continue, or is there chances that we want to begin the second wave of the bullish momentum that started a couple since the beginning of the month of October? However, if we look at this structure here, you will see that there are indications of a potential recovery from the daily lows as market participants exercise caution ahead of the Federal Reserve interest rate decision coming up much more later today. And in that regard, I'm beginning to be skeptical about the potential downtrend scenario in this particular market. Now, to give a visual representation of what I'm talking about here, remember that at the beginning of the week, we had our key level situated at the 1,980 area. If you had not watched my video on the XAUUSD, I encourage you to watch that video, as you will get to understand how we were able to identify this key level, which was serving as the yardstick to guide our trading activities for this week. And you know how we use our key levels in this community. As long as price action remains above our key level, we obviously want to be looking out for patterns and structures that support the idea of buying. And if price drops below our key level, then we want to start considering selling that asset. Now, if you look at what is going on in this market around that 1,980, you will see that it appears that buy pressure is beginning to resume around that area during the Asian session today, which is peculiar with what has been happening in this market since last week, Wednesday's trading session. And as a result of this, I want to be identifying this area as a temporary demand zone in the meantime. And one interesting thing about this area is the fact that it also lines up with that key level at the 1,980 area. So permit me, let's label this one. So I will call it a temporary demand zone. And I believe you want to be doing that too on your chart right now. So we call this area the 1,980, 1,975 zone. So 1,980 / 1,975 zone, right? So let's have it this way, and then we place it right inside the box. So I usually give this a lighter color, and here we go. So right now we have a demand zone to work with ahead of today's trading session. And if we begin to see buy pressure around this area or reversal patterns, we definitely want to be joining an uptrend move, as this area has a memory for buying power, at least since for the last 1 week. Now let's look at what is going on here in the last 6, 7, 8 hours now. Now, you will see that despite the strong bearish momentum that started yesterday, we saw how it became difficult for sellers to break through this area, hereby making price action transition into what is currently looking like a reversal pattern in the form of a double bottom structure. Now, look at the first touch of structure. Price came back into the 1,980, and the inability of price to break down the previous low is a sign that buyers are gradually gaining momentum, hereby giving us something that looks like a double bottom structure. And of course, you know how we do it in this community. Whenever we identify this transition of price action into a reversal pattern, the next thing we want to be doing is to mark out the neckline of that structure, which interestingly lines up with the week's key level at the $1,980 area. Now, what we need to validate this reversal pattern is the breakout retest of the structure. And in the last 1 hour, it's quite obvious. We had an engulfing bullish candle slicing through the neckline area to validate the potency of this reversal pattern. And for those of you who took advantage of this opportunity, well done to you for capitalizing on this move. Personally, I'm yet to capitalize on this one. So I want to see if the market will come back and do a retest of that neckline, after which I do want to be part of that move. So a breakout has happened right now. So if price will come back into structure, retest that level, then multiple buy pressure around this area will be all we need to confirm and feel confident joining that uptrend move. And remember, you want to have your stop losses in place. You want your stop loss to capture all this demand zone area, as we could still see some liquidity happen around this area before the uptrend scenario happens. So you want your stop loss to be around 55, 65 pips thereabout, so we can give enough breathing space for price action to breathe. Now, if price continues to climb to the upside, remember that we had a descending trend line here, which we identified at the beginning of the week, which has been supporting this bearish momentum, as you will see here. So if price action goes on to break out of that descending trend line, then we want to start considering adding more buy position. And if we need a key level to help us capitalize on that move, I think we have something exactly at that psychological level at the 1,985 area. So I would like to give this a different color to emphasize its importance at this juncture. So we shall be labeling this one the 1,985 985 zone. So let's mark this out on our chart, as we will be needing it as a reference point to guide more buying opportunities in this particular market. So here we go now. So we look out for more buying opportunities above the 1,985 level, and look at how it also shares a confluence with where price found selling pressure during the later part of the New York session yesterday. So if price action goes on to break out and retest structure, we want to be part of an uptrend continuation. So we have multiple levels as well, like the $1,990.60 level, like there. We also have the 1,975, which happens to be our first entry point for this week to capitalize on the uptrend. Then we have the psychological level at the $2,000 area, where breakouts of these levels will be welcoming more buying opportunities in this market. So this is how we are going to be holding on to a bullish idea on the XAUUSD for today's trading session. And it appears that this is going to be the order of the day, as long as price remains above this demand zone we just spotted here between the 1,980 and the 1,975. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. We also want to keep tabs with the opposite direction as well. Now, in this case scenario, and considering the fact that price still remains below the descending trend line, what will we see here that will make us change our bias from bullish, to bearish? Now, the only condition I want to see here is for price to take out this demand zone, that is, take out all the buy positions here, retest of structure, giving me further confirmations to join the decline to the downside. So this is the only condition at this point that I will be looking out for selling opportunities based on this current market structure. So these are my views on the XAUUSD for today. So let's see how this is going to play out. Personally, I still think that buyers still have a say in this market, and I still look forward to more buying opportunities. But if the market presents a situation where the demand zone is broken to the downside, then we have no other choice than to get ready to sell. So if you have any questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off to see if there are any questions before we round off for today's trading session. And that reminds me, if you have found this content helpful and useful in making your independent trading decisions, I really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it's like a source of encouragement, and it also allows the algorithm, the YouTube algorithm, to promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so. For those of you who had liked the project, thank you very much. I really do appreciate. And for those of you who are yet to like, please do so. It's the cheapest way you can support this project. Thank you very much as you do so. So in that regard, I wait for your questions. If you have any, I'll be taking the next 10 to 15 seconds off. Let's see if there are any questions before we round off for today's trading session. All right. So in the absence of no questions, I want to assume that we are all on the same page. And I just dropped a link to the XAUUSD live window right in the comment section below, pinned at the top of the comment section. So for those of you who don't know, the XAUUSD live window is a platform which was born out of a popular demand from this community, where we as technical traders come together to in real time monitor price action on the XAUUSD during the New York session. So it usually kickstarts 5 to 10 minutes into the New York session. So you want to be part of that session to see how we take advantage of trading opportunities, how we manage our positions, and how also we project new opportunities on the XAUUSD. So you want to click on that link, click on the notify me button so you can get notified as soon as we come on live. So thank you very much, guys. Please click on the like button. I'm here to see your response as regards the likes. Please, it's very important to me. Please do so. That's the only way you can support me on this project, and thank you very much as you do so. I see your comment, Princess Abulokwe. Thank you very much for your compliments. I really do appreciate that, and I look forward to seeing more of you. So on this note, I want to wish us all the best of luck. It has been a wonderful moment with you guys today, as we were able to attend to 3 major assets: the GBPUSD, XAUUSD, and the USOILSPOT, all of which we were able to identify simple trading setup using fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the market and strategically position ourselves ahead of today's trading session. So I encourage us all to exercise patience and allow our structures to mature before we jump into any positions. So on this note, I wish us all the best. And for those of you who are joining for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, if you do, I look forward to seeing more of you tomorrow, same time, 9:05 a.m. UTC. Sorry, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come back here again to review how well these assets have been doing and get ready for tomorrow's trading session, which promises to be an interesting one, as we look forward to the Bank of England interest rate decision coming up tomorrow. So on this note, I wish us all the best of luck. Please click on the like button, support this project. Your thumbs up are very valuable to me, and thank you very much as you do so. Do have a wonderful day, everyone. Bye-bye.